Hey, let's dive into the video and see how we can make some decent returns on a weekly, monthly basis. Let's dive right into it. Thanks for tuning in on this video. Welcome to the channel. My name is Wayne. I'll be going through what is called the vertical put trade, and I'll be illustrating how to do these trades with 90% probability of success. However, before we get into that, I would like to define what is called a call option and what is called a put option. A call option is a type of financial contract that gives the buyer the right, but not the obligation, to purchase an underlying asset like a stock at a predetermined price known as a strike price within a specific time frame. A put option is a financial contract that gives the holder the right, but not the obligation, to sell a specified amount of underlying asset, such as a stock, at a predetermined price, a strike price, within a specified time frame. Briefly, what is a vertical put trade? A vertical put is a trading strategy known as a vertical put spread. This strategy involves buying and selling put options with the same expiration date but different strike prices. Note that once this trade is executed, the premium goes straight to your account as live real money and is ready to be spent. So before we actually execute the trade, it is very important that we identify at least three conditions to be in place for this vertical put trade, which is a credit spread. And so the first condition is that the stock must be in an upward trend, meaning that the stock must be on an upward trajectory. And we're going to be using technical analysis to identify this upward trend later on. The second one is no announcement must be within the trade period. And we can verify the announcement by using the calendar for the stock. And this is on your platform, it's on the Think or Swim platform. We're going to be using those as we go by. And thirdly, we're going to identify the delta range of between 15 and 5 points, or if you want to put it the other way, 5 to 15 points. That is ideal to generate huge probability of success. Here we have the Netflix stock option chain. And this is showing a trade that is done on the 16th of February 2024 with a 4 week expiration date on the 15th of March 2024. So, as we have been talking about the deltas, here we're going to be using a delta of 11 points, and it is showing a strike price of 505. So, once we use the platform to execute the trade, and I'm using Think or Swim right here. I've been using it for over 20 years now, and I'm very comfortable with it. Upon sending the trade, you will get a trade dialog box which summarizes the details of the trade. It has the break even prices, which is $504. The maximum profit for this trade is $44. The maximum loss is 456, and the buying power effect is 456. That's what it costs to do this trade. And at the top in the red, it shows the strike price of 505 and $500 with the expiration date on the 15th of March 2024. On March 15th, the vertical put trade expires worthless at a break even point of $504. The stock price closed at 560, and this allowed the trader to pocket $44, which is an 8% return in 4 weeks. If you were to annualize this, it would be approximately 96%. I'm super happy with that kind of return over a 12-month period. Super happy. You will be too. It takes time and practice to learn stock option trading. However, if you focus on it, read, watch the videos again, you will catch on to it very quickly. Also, open up a dummy account and get started. You can reach out to me at chrisbank700 at yahoo.com, or you can access my book at ebanksfinancials.com. Thank you so much as we move on to the next section of this video. A quick reminder as well is to subscribe and like the channel so that you get updates on stock option trading. Uh, Please give us a thumbs up, and we look forward to your continued support. Thank you so much. Here we are doing a live trade on the 17th of May 2024, and we're using the Netflix stock option chain, and we're going to do a vertical put trade with a delta of 11 points. Just to expound again on a delta of 11 points, it means that we have an 89% probability of success. And I'm very comfortable with that probability. So let's get right into the trade. We're going to execute the trade. It's going to give us a break even point of 592, maximum profit 28, maximum loss 222, and the buying power effect is 222 as well. So we're going to confirm this and send it in the system and make it a live trade, and then we're going to check back with it in 1 week's time and see the results. Checking back on the results on the 24th of May, at which point the vertical put expires, and it expires worthless as the Netflix stock closed at 646. This trade, vertical trade, had a break even point of 592. So the trader pocketed $28 in profit, which cost him $222. This translates to a 11 to 12% return in 1 week. Very good returns, I would say, very handsome, and you will love it too.